It was never one tax. It was all of them. They tax it when you earn it, when you spend it, when you own it, when you grow it, when you give it away, and when you die, they tax it one more time. 13 taxes. And those are just the ones with names. In the next 13 minutes, I explain every single one. The difference was never how hard they worked. It was which door they walked through. Buy, borrow, die. The last rung on the ladder is a funeral. You are allowed to pay 0 federal tax. Not dodge it, not cheat. 0. Signed, filed, completely legal. You've just never done it. He has. Every year from this boat, and he's never once broken the law. The nurse who saved his life on Tuesday pays a higher rate than he does. ProPublica ran his actual numbers, all legal. The nurse saved his life, the code saved his fortune. Only one of them got taxed. There are 2 tax codes, one for money you work for, one for money you own, and you got sorted into one of them the day you cashed your first paycheck. By the end, you'll know exactly which side you're on, and the one legal move that crosses you over. So let's count every tax you actually pay, and who each one was built to spare. First bite, and the one you can actually feel. Income tax, the tax on money you earn by doing a job. It funds most of the government, and it's the first thing out of Walt's paycheck. Before rent, before food, before Walt. And it's where Walt makes the most expensive mistake in personal finance, the exact same one your coworker is making loudly right now. People think moving into a higher bracket taxes all their money at the higher rate, so they turn down raises, they turn down overtime, to stay in a lower bracket. That is not how it works. A raise can never lower your take-home pay. Only the dollars inside each bracket get that bracket's rate. You have been turning down money to avoid a tax that was never going to happen. Somewhere, a guy named Chad is very proud of this. So Walt does everything right. He works the overtime, he takes the raise. And the system taxes him exactly the way it promised. Dollar by dollar, bracket by bracket, top rate 37%. Which sounds rough, until you hear what it does to Owen. Because Owen's in the same bracket chart, the same 37% ceiling. And on paper, right now, Owen pays more than Walt. Hold on to that. We're going to come back to it, and it's going to make you angry. Look at Walt's stub again. Under income tax, there's a second bite. Payroll tax, Social Security, and Medicare. About 7.5%, gone before the money's even his. Now look closer. There's a matching charge Walt never sees. His employer pays the exact same amount again on top. Money spent on Walt that never reaches Walt. So the real number isn't 7.5%, it's closer to 15. Half of it is invisible, and invisible taxes don't get voted down. Now the ugly part. Social Security tax stops at a cutoff. In 2026, you stop paying it after about $184,000 of wages. So Walt, the nurse, pays it on every single dollar he earns. A surgeon earning 4 times as much stops paying partway through February. The tax built to fund everyone's retirement takes a bigger share of the nurse than the surgeon. That's not a glitch, that's the formula. And if Walt ever picks up a side gig, drives, freelances, sells anything, he pays both halves himself, 15.3%. The reward for hustling is a bigger bill. Walt takes what's left to the store and gets taxed again on money that was already taxed. Sales tax, the tax you pay without ever filling out a form. It lands harder on Walt for a stupid, simple reason. He spends his whole paycheck, so his whole paycheck gets taxed. Owen spends a rounding error of what he's worth. Same rate on the sticker, wildly different bite on the life. Sales tax is the one tax that's perfectly fair and completely unequal at the same time. Impressive, honestly. Step back. Income, payroll, sales. 3 taxes, and every one of them is built around the same assumption, that your money arrives as a paycheck. Walt's does. So Walt pays and pays and pays. But notice what we keep running into. Every time we measure the rich guy, the number looks fine. 37%, higher than Walt. The system looks like it's working. It is not working. We've just been measuring the wrong thing. Owen was never going to let his money show up as a paycheck. Let me show you what he does instead. Here's the switch. Money you earn by working is taxed at those high rates. Money you make by owning something that goes up, stocks, a building, a business, is taxed at its own lower set of rates. Long term, that's 0, 15, or 20%. Sit with that for a second. The tax code charges you less for making money by owning than for making money by working. The verb is the entire game. And this is the part that should make you put your coffee down. The lowest of those rates, 0, isn't a billionaire secret. It's a real bracket. In 2026, a married couple can cash in almost $99,000 of long-held gains in a light income year and owe the IRS nothing, legally, on purpose. Most people never touch it. They don't know the bracket exists, and they've got nothing parked behind it to sell. But here's the door you almost certainly do hold a key to: your home. Sell the place you live in, and the first $250,000 of profit, $500,000 for a married couple, comes out completely tax-free. That isn't Owen's loophole. It's yours, written for you, and most people walk right past it. You were never locked out of this room. You just never knew the door had your name on it. But Owen's real trick isn't selling at a low rate. It's never selling at all. And you already understand this move because you've done a tiny version of it. Ever refinanced a house or pulled out home equity instead of selling it? You got cash in your pocket and you paid no tax on it. Because a loan isn't income. You didn't sell the asset, you borrowed against it. Climb, same move, more zeros. A stock portfolio? Borrow against it. A margin loan or a securities-backed line of credit. Cash now, no sale, no tax. A few $100 million in company stock? A private bank hands you a loan against it at almost nothing, and you live on borrowed money, tax-free, while the stock keeps growing untaxed behind you. It's the same rung you stood on refinancing your kitchen. Owen's just higher up the ladder. And the higher you climb, the less the IRS can see you. So here's the first half of the one move I promised you. It's not a loophole, it's a category switch. Stop trying to out-earn the problem. You can't. Earning is the most taxed thing you can do. And start trying to own, even a little. That's half of it. The other half is the part that's almost rude how well it works, and it only happens at the very top of the ladder. Keep watching. Quick stop because someone's yelling, but corporations pay 21%. On paper, yes. In practice? In 2025, 88 profitable American corporations paid 0 federal income tax, nothing to the IRS, on more than $100 billion of profit. Write-offs, credits, losses carried forward, profits booked in friendlier countries. A corporation doesn't really pay tax anyway. The bill always lands on a person eventually, a worker, a customer, a shareholder. It just shows up wearing a logo. So Owen owns instead of earns. His money grows for decades and the tax never comes due. But never sell has one problem. Eventually Owen dies. And you'd think, finally, that's when the bill arrives. Decades of untaxed gains all coming due at once. You would be wrong. What happens at that moment is the single most expensive line in the entire tax code, and it's about to make everything you just watched look like the polite version. When Owen dies, his heirs inherit his stocks and his buildings, and the IRS looks at decades of growth, millions, sometimes billions, in gains that were never taxed, and does something almost unbelievable. It pretends the gains never happened. The cost basis steps up to the value on the day he died. The entire lifetime of profit wiped to 0 for tax purposes. His heirs can sell the next morning and owe nothing. It's the only tax break in America you have to die to use. And it is the whole reason never sell works. Buy, borrow, die. The last rung on the ladder is a funeral. But wait, you say, isn't there a death tax? Doesn't the government take half? This is the tax people get angriest about, and the one almost none of them will ever pay. The estate tax only starts after about $15 million per person, $30 million for a couple. And the part nobody updated? That giant exemption used to be temporary. It was supposed to shrink. In 2025, Congress made it permanent. So while regular people were warned for years that the death tax was coming for the family home, the actual outcome was the opposite. The threshold got locked in high for the people who'll never struggle, right as Step Up quietly erased the bill underneath it. The death tax panic was a magic trick. While everyone watched the scary number, the real money left through the side door, tax-free. Gift tax. Sounds like the government taxes generosity. It mostly doesn't. You can hand any person about $19,000 a year, tax-free, forever, and anything over that just chips at that same 15 million lifetime number most people never reach. It's a tracking system for the rich, dressed up as a rule that scares everyone else. Sin taxes. Gas, cigarettes, alcohol, soda. The government taxes the things it says it wants you to do less of, and then quietly builds its budget on you doing them anyway. It's a diet plan that goes bankrupt if you actually lose the weight. Property tax. You bought the house, you paid it off, you still write the county a check every year, forever. Miss enough of them, and you'll find out how conditional that ownership really is. You own the house, you just never stop paying for the right to keep it. Tariffs. Sold as a tax on foreign countries. They are not. The foreign company doesn't pay it, the importer does. And the importer is a business that hands the cost straight to you at the register. A tariff is a sales tax wearing a flag. Crypto. People thought it was invisible to the IRS. It is the opposite. It's property, every trade is a taxable event, and starting now, your exchange reports you directly. The anonymous money was never anonymous. It was just unexamined. The blockchain is a permanent receipt, and the IRS learned to read. Add it up. Income, payroll, sales, sin, property, tariffs. 6 different names, one identical target. The person who earns money and spends it. Walt's getting taxed in stereo. Owen's not even in the building. Remember the boat? The nurse who paid a higher rate than the billionaire? Now you know why. It was never one tax. It was all of them. A whole system that taxes the verb earn and forgives the verb own. Here's the final score. And the worst part isn't Owen's number. It's that there's a third column, yours. Go find it. It's closer to Walt's than you'd like. Now, this is the moment a guy slides into your feed. Tan, headset, a course. He'll tell you he can move you into Owen's column for $19.95. Here's the uncomfortable part. He's not entirely wrong about the mechanism. He's lying about the price. The door is real, but it doesn't open with a course. It opens with capital, the one thing the whole system spent 12 minutes skimming off your paycheck before you could save it. So the real move isn't becoming Owen overnight. It's stopping being maximally Walt. And you have more rungs than you think. The home you live in, up to $500,000 of gain tax-free. A Roth account, every dollar it earns never taxed again. Long-held shares sold in a lean year, 0%, the same bracket as the man on the boat. None of it makes you a billionaire, all of it moves your column. You won't close the whole gap in a weekend, but you were never locked out. Nobody handed you the key, that's the entire trick. The nurse saved a life and got taxed for it. The billionaire owned things and didn't. The difference was never how hard they worked, it was which door they walked through. Now you know where yours is.